Thanks very much. And Emmy, can you're leading the next Fireside, if you can come up. We've got our hopefully the only injury of the event. John O'Neill from HSBC Global Banking and Markets apparently fell over last night and is not able to come on stage. So we're lucky enough to have Nadev Zohar, who's the chairman of LRC Group, and very capable... Itai, sorry, oh my God. So my fault. I'll leave it over to you, Emmy, because you've got to recover me for that.
As we said, unfortunately, John couldn't be here with us. So a quick replacement, we brought Itai. Itai has massive experience in the banking environment and is now working on distribution of tokenization. And Itai, why don't you introduce yourself?
Sure, and hopefully John gets well soon. I have a little bit more hair than John does, so I'm not sure it's the best picture. But I spent 22 years in banking at Citi, in pretty much every markets business. I spent the last 5.5 years leading global foreign exchange for Citi, which is a massive digital business. And I saw in my career at Citi the real digital transformation of public markets. And about a year ago, about now, I founded Tom Next, and we really focus on building the distribution technology that allows, I don't like the word real-world assets, but I'll say real-world investors to source, diligence, and then execute, a universe of tokenized investment products across many blockchains.
Great, thank you. And for those of you who don't know me, I'm Ami Ben David. I'm the founder and CEO of Onera. We're a company that interconnects the market, and we'll talk about it in a few minutes as well. But I want to start with you. You've done trades in many, many billions over the years. When you're looking at the tokenized market and you're looking to distribute tokenized assets, where do you see the market fit? Where do you see the assets that clients actually want and why they want them, so that they would prefer to buy the tokenized version over buying the non-tokenized version?
Yeah, and I think this is the central question, Ami, around adoption. I think we should recognize that actually 2024 was a huge year for tokenization. I think it's the real first year that you've seen, substantive product market fit in the tokenized money market fund, growth. I mean, we've seen, a lot of big products launch, scale hundreds of millions of dollars in each one of these tokenized money market funds. And the product market fit there was in the crypto community. I mean, let's be honest. You had a group of folks that were, I'm going to use the word underbanked, right? So whether they used banking rails or didn't have banking rails or used stable coins, their treasuries were stuck without yield. And so the product market fit was really to bring a product which was invented in 1971. I mean, this is not some kind of newfangled financial exposure. A money market fund is a very traditional product. Moving it onto digital rails created an environment where these folks could access the product they were looking for, which is yield-bearing money. And so you've seen that product market fit really hit the Web3 or crypto community. And I think this is kind of step one, in my opinion. There's been like years and years of infrastructure built.
Which is a drop in the ocean in the total money market fund space.
I mean, in the US, money market funds are about $2 trillion. Right, so great, somebody's done a $500 million tokenized money market fund. It's great, but it's not like the big story.
It's a start.
Great, I think it's great. It's a big year for tokenization. So then you have things like, can we expand that product market fit beyond the Web3 or crypto community? Because we should also admit that the Web3 and crypto community is very small, vis-a-vis like the huge financial services universe. And for that, we need to do a few things. First, most of that community already has access to money market funds through their traditional securities accounts. The fees on those are single-digit basis points. If you look at the tokenized money market funds that are available on-chain now, they're much more expensive than single-digit basis points. So we need to sort of industrialize this effort to get those tokenized versions much more competitive with their traditional counterparts, but then we unlock benefits and use cases that you can't get via traditional securities rail. T0. So, and I said this yesterday at your event, actually. I make payroll, I take money from traditional money market funds, tokenized money market funds, and it's manual. I'm manually moving it to bank rails and then making, my company's payroll.
Manual interoperability.
Yeah, manual, human interoperability. the tokenization of MMFs and then true interoperability will allow lots of folks to be able to integrate and to pay with a yield-bearing dollar or pound or euro or whatever. That's like an enormous use case, even in the traditional financial services landscape, using them for collateral. So banks now generally don't collateralize with money market funds. There are reasons for that. One of them is the rail. There are other reasons. So collateral is cash or collateral is treasuries. It's very cumbersome. If you move a traditional asset like money market funds into those blockchain-based rails, you're going to unlock other use cases for an MMF rather than just parking my unencumbered cash in my securities account.
Beyond MMF, what other products do you see as?
Again, it's an analog. This is really about moving asset rails into a digital format. I mean, that's really the story here. So take analog assets, which for me is the real opportunity. This universe of alternative investments, alternative assets, private assets. What is it? It's paperwork, right? If I invest in a private company, or I invest in a structured note, or I invest in a private fund, what my investment is like a stack of paperwork. It's super analog. And who wants to invest in an analog format today? Actually, nobody, right? And it puts off the people who don't have scale. Like if you're a sovereign wealth fund, you've got hundreds of people probably that can manage analog paperwork. If you're an RIA in Cleveland, Ohio, or you're a small family office in Europe, you don't have that scale, so it puts you off this asset class that you want to engage in. But because it's not digital, you won't. So I think there's like a huge opportunity as tokenized alternatives, bring digital format to a universe of investors that really can't access those products today.
And I think we've been doing this for a while. And what we're seeing in the market, and maybe that applies to most people here, is that when you look at the two sides of the market, the supply and the demand, and I'll put the services on the side, but supply and demand, we're heavily weighted on supply right now in the tokenized market. Everybody's tokenizing stuff. And the stuff that people are tokenizing is better and better quality. So the pilots are bigger, right? And the assets are coming from better names and better protections and everything. But what about distribution? How do you get this into the clients? And what we found was that the distribution, when you're trying to go to the distribution at the traditional distribution, private banks, wealth management, and so on, those organizations are relatively slow to move. They have a history of 30 years or 40 years of doing something in a certain way, a certain structure, and so on. There are some visionaries that are moving faster than others, and I think they will be very, very successful, but there's also objection, which leaves room for new parties to come in and just basically take market share. So,
well, we're trying.
Yeah.
Let's just say for the sake of argument, but I do think it's true, the supply of assets to move on chain is basically infinite.
Yeah.
It's basically infinite and can be done in a whole bunch of different ways, right? And
you do one, you can do 1,000 if there's demand.
And we've had a lot of investment in this space in the last 7-8 years. There are multiple providers, banks are getting involved. I call that the origination layer.
And if you don't know how to tokenize, go to Tokeny, speak to Luke or Daniel, and you can tokenize.
Yeah, it's actually not that expensive even, right? And then the market infrastructure is there, as you said. Okay, so what does demand need? So what does the investor actually need, right? So a lot of these folks are still stuck in an analog world. They don't have technology. Okay, so what are you actually asking them to do today if you want them to execute, to source, to get involved? You're asking them to go to dozens of websites, right? You're asking them to have wallets, key management, and to deal with blockchain rails that they don't understand, right? You're asking them to really have like core knowledge about market infrastructure. They don't care about that. They're trying to service their clients. Their job is to help their investors do well financially, right? So what's really missing is digital tools at the investor end to say, all of this is abstracted away from me. Like, I don't care what blockchain the asset is on. Why should it matter to the investor? The same way it doesn't matter that Tesla stock is on NASDAQ and Spotify is on the Swedish stock exchange. To the investor, it's a stock, right? And they can then make their choice. Now, we know, those of us who are in the kind of bowels of financial services, that the actual technical infrastructure of the Swedish stock exchange and NASDAQ is different, right? But the layer to the customer is unified, whether you use Interactive Brokers or Fidelity or whoever, right, or many other providers. Like, that's completely missing in this discussion, in this landscape, and that's what we're trying to build. We're trying to build the user interface layer that helps clients first just source assets from all over the blockchain networks. right? So it shouldn't matter that one asset's on Ethereum, another asset's on a permissioned blockchain from a bank. If they're available to the client, let's display them, show them, and give them access to both, and let them make choices about building great investment portfolios, right? And then the execution piece has to be natively digital and not complicated. I call this like kind of click and trade. You do the setup once for your client. Of course, you need wallets. You're dealing with blockchain. You need key management. You do this once, and then all of a sudden, it's digital by design. Right? You like an asset, you diligence the asset, you understand it, your client wants to put in 250,000 pounds, it's available to them, you click a button. That button is the same no matter what blockchain it's on. The orchestration and the infrastructure is different, but that's abstracted away from the client. Today, that's not the user experience for investing in tokenized assets. So that's what we're trying to do. That's what we're trying to
Tom Next, your company.
That's our business.
Yeah, I can also send people to check. We had a press release with Fireblocks the other day, and I think what we're trying to do there is we're trying to harness the Fireblocks network of over 2,000 clients, hedge funds, market makers, and so on, that trade a significant amount of the world of crypto today, but don't have access to tokenized assets. So with one of our routers that gives them the access, they will be able to offer tokenized assets as well, starting with money market funds to the Fireblocks network. And Tom Next is going not necessarily to the crypto people, but more to the general kind of market as well as crypto people. So with initiatives like this, we're trying to open the distribution in addition to the work we're doing with other parties and big exchanges and so on, which are coming to market, be it kind of slower because they have big systems to run, and Itai is starting from scratch, so it's a lot easier.
I think for us, like starting from scratch is really important because what's out there just isn't really suitable for these rails, right? And let's also admit that under the hood, like if I have to connect to every single blockchain independently and manage that, it's super difficult. So maybe I'll ask you in return, Amit, because interoperability for us is like critical. It minimizes the number of connections and complexity, and it makes it easy for us to orchestrate across blockchains. Customer might have their assets in fiat or on one chain, they want to buy a tokenized asset on another chain. So how do you think about the interoperability challenge that you're trying to solve? Because for us, it's like a real key piece of the infrastructure to unlock the user experience.
Yeah, I mean, we don't even look at it as interoperability as much as we look at it as interconnectivity. The question is not how can you connect two blockchains to move a token between blockchain A and blockchain B. That's a technical question. I really think it's not interesting in our market. What's interesting is connecting supply and demand, connecting all the tokenization platforms out there that sits on all the blockchains to all the distribution platforms where clients can actually access, distribute, have liquidity, use collateral to borrow against these assets. So you need to connect supply and demand, and without that, you don't have a market, right? In addition, you have to connect to all of them the security services that they need in order to operate, the custodians, the payment services, which you can look at it also as another type of asset. So the collateral services, how do you connect the flows to the prime brokers, and so on, the data providers, the rating agency. How do you connect all of these people? Or the other question is effectively, how do we connect all of you around here in the table? And I think that we had an event that we talked to about 80 top executives at the digital asset industry, and they all agree that this is a top priority, that almost without doing that, we don't really have a market that is scalable. We have a lot of siloed markets. We have a lot of hard-coded API to API solutions that many of them don't scale. Some of them can scale enough to be a business, but they don't scale to the billions and the trillions that the potential is there. So everybody agrees that we have to have interoperability or interconnectivity between the parties in the world. And in addition to that, if the challenge is to connect everyone in the room to everybody else, that's the only thing that people agree on. People agree that they need to connect, but they don't agree on which blockchain to use, how to use it, which flows, and so on. So there's a lot of complexity. And therefore, the model that we went with is a model of routers. Like the internet, you don't need to know how to connect to Amazon with a connection that is API to Amazon. You don't need to have an API to Google and an API to Microsoft. You buy a router from Cisco, they buy a router from Netgear, and effectively you connect with each other. And we are now in a position, after working on it for a significant amount of time, that enough of the major financial institutions have a router or are in the process of putting in a router and starting to put flows and use cases on top of them. So specifically for Tomnex, we're going to give Tomnex a router which is connected to multiple sources of assets. And tomorrow, if somebody else wants to start selling through Tomnex, they just need a router connected to their tokenization solution, regardless of which blockchain it connects to. We're now connected to anything on any public chains through the connectivity with Fireblocks. We're connected to R3, to Canton, to Beiju and Quorum. So interoperability now is here, and it will be interesting to see what where this will come from there.
Well, for me, what you've built, actually, it's built and deploying, like it allows me to do something really important for our clients, which is aggregation, right? Because really, like, and this is, I think, a really core principle of digitization in anything. So, we often, to non-financial people, we use ebooks analogy, right? So I think of tokenization's analogy as the concept of taking a paper book and making an ebook out of it. And what you've seen in this industry is like many standards of ebooks. They're all secure. They all, verify that the book is the same book and that I actually own a book, but it's all over the place, right? And then for us, and again, the analogy for us is Amazon Kindle, right? Like we provide the Kindle that lets you consume them all. But if there's no way to interoperate between this network of booksellers, book infrastructure, secondary market of buying and selling digital books, then it doesn't work. Like the Kindle doesn't perform. And so for us, like that ability to aggregate everything in one place has to rest on interconnectedness. The same way that in public markets, I saw this in FX. Okay, so I started my career in FX. We still had phone to phone. It was kind of like, it was a messy, very bilateral. You'd call another bank, it was all bilateral. And then you started to bring the foreign exchange industry onto all the digital rails. Whether they were PB messaging rails or settlement rails or SWIFT, all these kinds of things. And then just this ecosystem of multi-dealer started to build up, this idea of having a front end to the point now that like when you go on Revolut and you exchange money and it costs almost nothing, it's all enabled by the interconnectedness of the market of that digital asset.
The whole concept of having connectivity that doesn't rely on the underlying technology but connects to everything allows you to connect things that are on blockchains to things that are not on blockchains, like the fixed network or the SWIFT network and other exchanges and so on. You can grow the market. I want to take your, we didn't talk about it, but I want to take your book analogy and expand it a little bit because I really like the book analogy. And think about this way. There are multiple ways of doing interoperability, and the way we thought about it was that if Amazon sells a book, and if Google sells a book, and if Microsoft sells a book, everybody have a router, and you can see all the books and buy the book that you want. Whereas in some places in the crypto market, the method that they're advocating is that if you want to buy, you have to have a connection with Microsoft, and then if you want to buy a book from Amazon, they have to burn the book, and then Microsoft have to reprint it, and then you get the book. It's just not scalable, these things. And I'm very glad to see that the market is kind of now in a position where everybody's understanding the value of interoperability, and I would say baking it into the product as a priority and not as an afterthought. Interconnectivity is not something that you can say, hey, let's just build a tokenization platform and build interoperability or interconnectivity into it once we're done, because then when you're done, you can't sell. If you can't sell, your asset is not happy, you're not going to get the second asset, right? So you have to think about it from day one as a priority rather than an afterthought.
Look, I say this, it is much easier to build in a single silo. Like anybody who's been in banking or is in financial services knows that. Right? But the user experience, which is what we're trying to ultimately get here by changing the format of assets and financial services, needs to be enabled by, and again, I don't use this term, it's not really open architecture, but by an architecture that actually creates the kind of like commonality, the access. And again, it doesn't mean that if like, again, I'm just going to pick on, Goldman originates an investment and they only want to sell to these 5 types of networks, they can still permission that. It doesn't change that it becomes I think the concept of democratization is the total wrong word, right? Like for a lot of assets, they're not democratic by design, but it creates easier and digital access. So it means that when a bank like Goldman wants to tap a new channel, it's much easier to just permission switch on because it's all interconnected. And I think that's really important.
And that's how stuff on public chains and stuff of private chains can coexist, because you just get the assets from the private chains that are private and the assets from the public chains that are public. I'd say the private chains have the advantage of, today, the advantage of privacy. This is the major advantage. Nobody knows your business. Public chains, if you do a trade, everybody knows your business. So, but on the other hand, public chains get more kind of adoption, easier kind of access to keys and so on. So each one have advantages, but at least if you have interoperability in a proper way, you, the distributor, don't care, and you shouldn't care. Why would you care if somebody chooses to put an asset on private chain and somebody else puts it on a public chain?
Look, the investors want the assets. They don't care about how they get them, really, as long as it's easy, seamless, cheap, fair, secure. The asset is legally certain. So, like, we have a lot of argument about which blockchain is going to win, right? Like, I think we can all admit there's going to be many, but not like an infinite number, but many chains, and they're going to have a mixed architecture. Some will be highly permissioned, some will be completely public, but the wallets will be permissioned. Most of the financial services universe is permissioned. That is by law, so, nothing here changes the fact that these assets legally can go to certain people and not to other people. But in the end, like, why should the investor care? And if you make them care, you've destroyed product market fit. You've destroyed the user experience for adoption. So the key is to make them not care.
Yeah. Okay, I think we're about on time now. And just the message generally is that Itai's company is out there to start distributing your assets. So
yeah, visit us on tomnext.co. Sign up for our beta. We're going to launch very, very soon. And we'd love to chat. So find me and we can talk about distribution of tokenized assets.
Thank you, Itai.
Thank you very much.